What's up guys, William Ryan here, back with another video. And in this video, I'm going long on the NASDAQ. And so basically what we have here, guys, we have a market maker buy model unfolding, right? And we have an optimal advance setup that just happened here on the 1 minute chart, right? So I'm expecting this balanced price range in here and this fair value gap to hold price, okay, for smart money to accumulate more longs, right, to then reach the buy side liquidity resting above the marketplace over here. So I'm expecting the buy side here to get hit. Okay, this balanced price range in here, really want to see it hold and order flow continue to move higher. Right, so this is another one of the ways, guys, that you could potentially pyramid. Right, so you have an OA set up here, price trades above, okay, this high and this fair value gap. Okay, to me, that's a great sign that we're going to continue to move higher. Right, trading through this fair value gap, creating a balanced price range with a lot of speed. That is a very, very good sign. And so we're going to add on another position here. Okay, looking for higher prices. Our stop is going to go below this low, just about. Okay, looking for this balanced price range here to reject, to accumulate some orders, and then head higher in the form of a low resistance liquidity run. So we want to see speed, we want to see big candles, and we want to see the draw on liquidity get hit relatively quickly. All right, so within the next 15 minutes or less. Right, this is institutional order flow entry drill right after OA. Right, guys, so again, the premise is obviously we have optimal advance here, so the William% is diverging. At the same time, price is coming into a 1 minute fair value gap order block. Okay, so we trade to the fair value gap, we expand higher, right, in the form of a low resistance liquidity run. What do? We take out this liquidity pool and this liquidity pool. Price comes back down. We trade through or trade into this balanced price range, okay? We are looking for more accumulation here to go long, right? So this is one of the ways that we can utilize optimal advance. Okay, if we do miss that initial entry, right, it's going to be okay because there's going to be another opportunity, right? So if you have anything that forms like this, right, we have a down close candle, fair value gap, and then it gets traded through in multiple candles. When price comes back down to that area, okay, we can be a buyer. And why do I have confidence and conviction in this setup, right? The reason being is we know that from optimal advance, okay, from this setup here with the William%, we are going to expect low resistance liquidity runs, right? So we want to see big candles come in, right? And I really believe we're coming for this high in here, or these highs, right? Clear draw on liquidity, right? Very, very nice market maker model we got going on here. And so we want to close, again, same premise, guys. We want to close above this potentially newly formed balanced price range, right? So when price expands, if and when it does, through this BPR, okay, I'll be very, very confident and have lots of conviction in these highs getting taken out. So stop can now go. Can be a little bit tighter here. right? And so one of the other things that I do like is this balanced price range here. Notice how we don't come down and trade to the mean threshold, or the consequent encroachment, right? So we left a good portion of the BPR open, right? Which is, again, a very good sign of a low resistance liquidity run, okay? It's telling us that it doesn't want to spend a whole lot of time in here and that it has somewhere else to go, right? It's exactly what we want to see. And so we don't want to see this low get taken out, guys. We want to see this balanced price range hold. Just going to take a peek here on the lower time frame. Yeah, so we need to reject out of here fairly soon. Really don't want to see price close below this balanced price range here, because we closed above it, and then if we close below it, that's not ideal. So this is good here. The fact that we did not close below this balanced price range, that's what we want to see. And now we kind of want to see this engineered buy side taken out with a lot of speed. We don't really want to see price waste any more time in this area. The longer it spends in here, okay, the more likely we're going to get stopped out. So we're going to get a expansion here very, very shortly, and hoping it'll be in our direction. This low could be a turtle soup. I'm really hoping it doesn't get here. But say if this low gets taken out, we could reject and move higher. Premise stays the same. We need this balanced price range in here to hold. Right, I don't mind this consolidation. We come down. Just going to give this stop some room. Okay, we want to see price reject here. We're in the bottom end of the balanced price range on the 1 minute. So we need to see price reject here. I think we're going to turtle soup long here. Going to add another order here. Really want to see fast candles. Okay, guys, with some volume, some speed, some velocity towards the buy side. We want these guys to get taken out very, very quick, right? Smart money, or the algorithm, is not going to want to give these guys a chance up here to get out in time. Right? So what they're going to want to do is take out the liquidity very, very fast. Okay, we all know as traders when things happen very, very quick, right, and not as we anticipate, sometimes we begin to panic, right? Especially if you're newer to trading. Okay, you're going to begin to panic a little bit, make some decisions, maybe make more decisions that you don't want to make. Right? And so that's what their goal is here, right? Their goal is to take a bunch of traders out and also put a lot of traders in, right? Because a lot of traders here are going to have buy stops in the marketplace, okay, to go long on a breakout. And everyone who's short has their stops above these highs. So what I would like to see here, that would give me a lot of confidence and conviction in the setup, is this balanced price range here. Again, right? So if we close above here with speed, okay, that's going to give me a lot of confidence and conviction that these highs are going to be the next stop for price action. Very, very crucial point in the trade, right? So if price comes down and takes out this low, okay, right, which is the turtle soup long that we mapped out, right? If price takes this out, then I'm no longer interested in the trade, right? So we're at a very, very key point in price action where if we're going to expand higher, okay, we're going to do so now, and we're most likely going to hit our TP. Or if we do trade below this low, okay, we're going to get stopped out and I'm no longer interested in the trade. Okay, notice how after the multiple positions added, right, how our risk to reward went from, I believe it was a 2-to-1 to a 4-to-1. And right, that just comes by understanding the context of the marketplace. So like I mentioned before, if we take out this low, my stop's here now, right? Because I don't think we should come back down and take out this low and then move higher again. I don't think that's like in the cards, right? Because we already traded lower into that deeper portion of the balanced price range, right? So if we come back down below this low, we're going to get stopped, right? So understanding context is key, right? Understanding which highs and lows are most likely going to get taken out. And let's say if, like in this case, this low gets taken out, we don't want to be in the marketplace long anymore. Right, we're most likely going to be on the wrong side. Right, so we should get very, very big candles here, expanding towards our target. Those big candles are coming. Again, guys, because we traded up into this balanced price range, I don't want to see price close below it again. That will not be a good sign for our trade. There's another little small balanced price range in here. Yeah, looking like we're going to get stopped out. Couldn't get those big candles out of this area. Stop loss is going to get hit. Just let it play out. Typically, you don't want to see these balanced price ranges or fair value gaps, for that matter, get utilized more than twice, especially after a soup here like this. Right, but that is exactly why we put the stop below the low, right? Because if it takes it out, it's probably going to take it out with speed. And like I mentioned before, we don't want to be a part of that, obviously. We don't want to be long when price is absolutely mashing lower. And so typically I don't like seeing this, but the reaction that we're getting so far is not that bad. But again, it all stays the same at this point. We've done our job. We've executed when we should have executed. Okay, we have a clear draw on liquidity above the marketplace. Okay, optimal advance was here, right? We utilized this balanced price range for continued longs, right? Missed our OA setup. And now we're looking for a continuation in order flow for the highs off of this PDA right here, the balanced price range and the fair value gap. So we'll see how this plays out. I will say this, if we do move higher and take out these highs, it's going to do so with a lot of speed. Like you're going to see candles like this. Here we go. Notice how price again, when we did come back down here into this balanced price range, where did we come to? Right at consequent encroachment. Okay? Perfect. And then we got right back out of there. So I really do like this. It's a good sign for our trade. That's why you always want to put your stop loss below the low. We need to get through this area here. If price comes back down, essentially to our entry, then I'll probably scale a couple off. So start removing our exposure, right? Because if it comes back down and takes out this low, there's no reason we should take a full loss. Okay, now especially that we've traded above this BPR, okay, we should get those big candles now if we're going to be correct on our bias. If price does come back down to our entry, I will start to remove myself from the trade, from the market. Again, when we see price action, when we have a low resistance liquidity around signature or what we think is going to be low resistance, whenever you have highs getting taken and then price returning right back into the range, that's typically not a good sign. And you guys always want to keep that in the back of your mind. Okay, if we're going to be targeting here, it should do so with speed. And if we're not necessarily getting that, and we're taking out highs and returning into the range, not ideal, right? So that's why when price comes back to my initial entry, if and when it does, I'm going to remove myself from the market. We're within the macro now as well. So the last 9 minutes of this hour, we should get some volume here. Stop loss now is going to go below this balanced price range, so pretty much at break even. Okay, because if price comes back down here, we do not want to be a part of the market. We do not want to be a participant in the market at that point. Okay, we've traded above this BPR, right? If we're going to be targeting these highs, we should be going there with speed right now. And the longer we consolidate in here, right, the less interested I become. That's another reason why my stop is where it is at break even. First things first, guys, always preserve your capital. And then secondly, we want to compound that capital. If this high gets taken out, we're going to do so with speed. And I think TP will get smashed. Right? A lot of contraction in here. Contraction, expansion. Really want to see candles like this. Really want to see speed, displacement. If this trade is going to hit TP, I would like to see it get up there within the next 5 minutes before the hour closes. If price doesn't get up there before the hour close, I think we're going to get stopped out at break even. This balanced price range here, we do not want to see it get reclaimed. If it does, I think we're most likely going to get stopped. And price will trade through this balanced price range and potentially even take out this low. this BPR here needs to reject right away. Like if price comes back down like in another candle and begins to spend time in here, I'm no longer interested in the long. And again, guys, if we do take out this high, I want to see it do so with speed and take out this liquidity pool before, preferably before 12. Right, guys, we've done everything correctly here in this trade. And so there's nothing else to do, not much else to talk about other than just waiting it out, letting the trade breathe, and letting price play out. So that's exactly what we want to see. It's 1 minute till 12. $40 seconds to close. I'd prefer this buy side get hit before 12. Ten seconds left. Let's see if we can get up there. We want to see this next candle continue with speed. Power of 3 opens, pushes down. And then now we want to see this thing fly towards the take profit. Right, and the reason being why I wanted to see the TP get hit before 12 is because of the power of 3, right? So typically when candles form, there'll be an open, high, lower, close. And so say if we're bullish, right, when that hourly candle opens, it's typically going to move lower first, right? In some instances it doesn't, but for, I guess in this case, we don't want to see it obviously retrace. We just want to see it continue moving higher and rip towards these highs. And again, notice how we're not getting like massive displacement, like big candles. When you guys aren't getting big candles, 2 and 3 your buy side or sell side liquidity pools, Okay, you want to be taking a majority of your position off at that initial first target, right? Just to play it safe. If your TP is not getting blown through and say the high that you're targeting gets hit, right, you do want to take off a big portion of that position, even if you are very, very bullish. Right, because we haven't had any displacement really. So this could be a classic case, right? If you notice too, like if you look at turtle soups, there's a lack of displacement. Yes, this move here, like the turtle soup that we called before it happened, right? There's no displacement. There's no fair value gap. There's a tiny one here, right? But when you have price contract like this towards your TP, once the TP gets hit, you immediately want to get out, right? At this point here, I don't like what's going on, right? And we don't want to see price return back into this area. This order block here needs to hold. And now my stop is actually going to go below this most recent low, just to pay me for my time. Small little fair value gap in here. Order block. We got to see price run here. Look at this, just contracting. No displacement. This is a high resistance liquidity run. So if you can pay yourself in this environment, guys, although the full TP doesn't get hit, I know it's not much of a profit compared to like the sizing of the trade that I had on. You're still paying yourself in not very quality markets, right? So we have OA again here. See how the William %R is taking out this low, but we're failing to do so in the price chart, right? That's indicating to us a change in state of delivery. We need to get displacement now. This was actually a very nice OA setup. Very, very nice with a clear draw on liquidity. We could have added on more here, but because of the context of the trade and this kind of mess that we've been in, right? If I was trading live here, I wouldn't add another one. I wouldn't add another position here anyway. Right? Already have 3 positions. And at this point too, our stop can actually go below the most recent low, right? We can just keep trailing our stop. As soon as that high gets hit, guys, I'm going to get out. If and when it does. Okay, so the next pool of liquidity that gets hit, we're going to be out. Either the highs that we've been targeting this whole time or the most recent low that just formed. Still yet to see that displacement. So notice how we have that balanced price range here. Right there. So this BPR here needs to be respected. Okay, there's no more coming back below here. I'm even going to jam my stop a little bit more. We should go for that buy side, right? If we take out this high and then reject, I'm out. But it's looking like we're going to get that expansion towards the high now. All right, guys, that's it. Right, so another trade execution video to kind of help you guys with the setup, and even if you missed the setup, some other ways to really utilize the framework, right? If you guys use OA and you guys are very, very comfortable with it, I would highly recommend you study what happens before it and after the setup forms on how you can get in the moves or before the moves. Depending on if you're late or if you want to be early. So this was a great trade, guys. Very, very nicely done. And until next time, good luck and good trading.